Episode 15. Execution Without Chasing. How Good Traders Don't Blow Good Ideas. If Harmonia has done its job up to this point, you already know where the market is and when it's worth paying attention. This episode is about the hardest part of trading, doing nothing, until you're allowed to act. Most traders don't lose because their idea is wrong. They lose because they enter at the wrong moment inside the right idea. That's execution. Why most traders chase without realizing it. Chasing doesn't always look like panic. Most of the time it sounds reasonable. I don't want to miss it. It already accepted I should be in. I'll just use a tighter stop. But in Harmonia terms, chasing usually means entering after acceptance, entering away from structure, entering in the middle of probability, not the edge. That's how good ideas quietly turn into bad trades. Acceptance is not an entry. This is critical. Acceptance tells you one thing only: the market chose a side. It does not say, buy now. Acceptance gives you permission to stalk a trade, not to take one. If you enter the moment 20% accepts, you are late relative to risk, exposed to pullbacks, paying retail. Professionals wait for re-engagement, not confirmation. The Harmonia execution rule, a clean. Harmonia execution always follows the same sequence. Acceptance occurs. Price pulls back towards structure. Price reclaims in the direction of acceptance. That reclaim is the trade, not the breakout, not the first push. The reassertion of control. That's where risk tightens and probability expands. Why pullbacks are not weakness. Retail traders hate pullbacks. Professionals depend on them. A pullback tests acceptance, clears weak hands, improves reward to risk. In Harmonia, pullbacks to 20% after acceptance, EQ after a failed extension. Prior distribution levels are where real trades live. If price never pulls back, you didn't miss a trade. You avoided risk you didn't need. How far can price pull back without invalidating? This is where most traders panic. In a bullish acceptance, price can dip slightly below 20%. It can stall. It can rotate as long as it closes back above 20%, does not accept below EQ. The structure remains intact. Invalidation is structural, not emotional. Stops. Where traders give money away. Stops fail when they're placed at obvious lines, exactly at 20%, exactly at EQ. Harmonia teaches something subtle. If you're wrong, you want to be clearly wrong. Good stop logic lives beyond failed acceptance, beyond EQ when structure flips, beyond rotation zones. Tight stops inside auction zones don't protect you, they get hunted. Why fewer trades make more money. Once execution clicks, something strange happens. You trade less. Not because there are fewer setups, but because you stop forcing them. Harmonia naturally filters out midday boredom, fake continuation, balance phase over trading. Most profitable traders don't trade often. They trade correctly. Execution is emotional control, disguised as logic. Here's the uncomfortable truth. If you struggle with execution, it's not a strategy problem. It's a patience problem. Harmonia already defines location, acceptance, invalidation. If you're still chasing, it's not the model. What a missed trade really is. A missed Harmonia trade usually means structure didn't form, risk wasn't favorable, patience saved you money. The market offers infinite opportunity. Your capital does not. From execution to mastery. At this point in the series, you now have structure, timing, execution rules. What separates good traders from durable ones is consistency. In the final chapter, we'll cover how to journal Harmonia correctly, how to recognize when the model doesn't apply, and how traders evolve from setups into understanding. That's where mastery begins.